September. Again, reminder to check us out every second Wednesday of the month at 10 a.m. We are live answering any of the questions that you may have about real estate, mortgages, investing, any of that stuff. And today, I would like to welcome back one of our guests, Colin Valentine.
Nice to see you again. Well, that was Dan. I was doing a scouting handshake there.
From Bricks Mortgages. Follow him on Instagram. I highly recommend it. He's got a lot of great content on there at The Mortgage Builder.
Yep.
Okay. Any other platforms they can follow you on?
Oh, I'm on everything.
On everything? Yeah. Okay, it's great stuff. Videos are great. You'll get a lot of great information from them there. So today we're going to talk about rates. There were some changes just this past week. We're going to talk about what's to come with rates, and we're going to talk a little bit of property investing as well. And before we continue, again, today is September 11th, so our thoughts and prayers go out to everybody that may have lost someone on September 11th, 23 years ago. So yes, keep everybody in your thoughts and prayers. So, Colin, again, thank you for coming back.
Always great to be here.
Good. I'm glad that you didn't turn us down after the first experience. So we know that summer's over now. There's still technically summer, but it feels like summer's over now. Kids are back in school, football's back on. I feel that on our side, the appointments, showings, all that stuff is starting to pick up. So it tells me that people are out of that summer mode. What are you seeing on your side? Give us a little update on what happened with the rates last week. And
yeah. There's been quite a big shift. So the Bank of Canada, we all know, has done 2 drops now, 325 basis point drops, and there's a lot of discussion right now. There's a good and bad mix in terms of what's taking place. Softer economy, higher unemployment, all of those things are driving to, rate cuts are going to be coming. So while it's not great for the economy, it's great news for interest rates coming down. So there's speculation now we might see a 50-point basis cut, maybe even October and December, but certainly another 25 basis points for each of them. The big banks economists have talked about the fact that they had rate projections that were like, we'll be in the 4s and maybe the high 3s, and they're actually lowering those expectations between now and the beginning of 2026.
That's great.
So the Bank of Canada rates, so if you're in a variable and you're looking for riding the adjustable or variable rate mortgages, you have a good opportunity to do that. And I haven't been able to say that for a couple of years because a lot of people who were in the variable or adjustable rate mortgages were facing higher interest rates, less payment on their principals, or higher payments coming out. And the fixed were, the traditional, hey, get me into a lower fixed rate. So now take the other side. You've got fixed rate mortgages. And the bond rate, the 5-year bond rate, so is, the fixed rates follow the bond yields, and they have been dropping. Over the past even week, they've been going down. So we're like, 2.38, I think I was seeing last night. I was looking at them. So we're getting emails constantly in regards to rate drops that are taking place. And while last year, this time, we were putting people into the high 5s and 6s, we're into the mid-4s. I have seen a discount brokerage that advertised a short 6-month mortgage lower than 4, with a lot of caveats in there and constraints. But the mortgage rates have really taken a turn, which is good news for people coming up for renewals or refinances, and for first-time home buyers, because it really opens up a lot more in terms of what you can afford on a house. So if you have a down payment and the house was based on a 5% interest rate and now you're into the mid-4s, that's opened up a lot of equity to be able to buy a house at a higher price. And as you know, a lot of condos and things haven't been selling. So there's this sort of sweet, I would say like lull that we're kind of in at the moment that I'm seeing a lot of interest come back.
Okay. And out of 10 people, how many are, still leaning towards fixed rates or variable? Is it pretty balanced right now, or?
Well, if I were to compare it in the short term, I'm seeing now people that are making recommendations, and people are coming back saying, I'd like to get into variable. Like I said, for the past 2 years, no. Historically, I did, a lot. And it would be like a 50-50 mix. And it's now starting to creep back up because of that interest rate environment where we're seeing the drops.
Yeah, I know, in just speaking to some of our buyers or sellers, some of them are a little bit gun shy on variable just because they did buy in that 2021, 2022, went with variable. saw the spike, and they get a little bit weary to do it again and get burned again. But with all of this talk about rates going down, they do definitely want to inquire about that again, because they feel like they're only going to save money in the short term.
Yeah, and it still comes down to there's no right or wrong for choosing either of them, because there's a comfort level that people have. Some people are like, I really love the security of a standard payment, not going to change. I'm locked in and go. And some people kind of like set it and forget it, like get the mortgage, run it for the 3 or 5 years, and I'm just going to pay it. And if it's slightly higher, it's slightly higher. I was lower before. Right, so they'll run that way. Other people are I would say, money maximizers, and are like, no, I'm a little bit more risk friendly. I will take that risk to ride it. Yeah. And during COVID, that worked out really well at the start, and then pretty punishing at the end. On the average, the general consensus, when you take a look at the longevity of a home ownership, not just a mortgage, a variable will outperform a fixed over the length of owning a home when you take a look at the total mortgage length, but you can hit those short-term pains in between.
Right.
So,
okay, that's great to know. That's good. Are you finding on your end, is there, over the past couple of weeks now that summer's done, have you found a lot of people starting to get pre-approved for the fall? Has it picked up? Because usually if it picks up on your end, we hope that all the people coming to us are pre-qualified. It's not always the case, but if you guys see a pickup in interest in being qualified for mortgages and stuff like that, then usually it trickles over to the real estate side as well, and we start to see a little bit more action with buyers.
Yeah, we're kind of a little bit of the front crest on
That's
that.
right,
way.
yeah.
Yeah, and over the month of August, I have seen more people coming out. In particular, I'm seeing the return of a lot of first-time home buyers. So it's not uncommon for me to work for a first-time home buyer for a year and a half, even 2 years, to say, hey, let's get your first home savings account set up. Look at your RSP programs. What do you qualify for? Yeah. Let's look at all of your plan to qualify. And a lot of them are pretty gun shy when those rates are higher. And now all of a sudden it's like, oh, there's opportunity. So it's nice to be able to go through and update their budgets for them, and they're starting to get into the shopping mode, because it looks like it's going to be something that's going to work for them, because we're finally seeing prices and rates shifting to, hey, things are becoming a little bit more affordable. Yeah. Don't get me wrong, rates are still not that 0.25%.
Right.
But we are swinging into what was historically a more average interest rate.
Yeah. Okay, no, that's good. Again, I like to hear, and like I said, I see the activity picking up a little bit. New listings coming up. I know there's about 4 months worth of inventory right now, and we've been preaching all summer long. Like, if you're a buyer and the rates are going to be going, or you have an inkling that the rates are going to be going down, it's a great time to get a deal before the rates do go down and prices start to go up, because there's a little bit more interest and maybe inventory comes down. So we've been preaching it all summer long, but people were on vacation mode, and
The nice thing about, you start that process, you don't have to commit to purchasing when you get pre-qualified, right? Yeah. If you get all your documentation in, like your tax files and stuff, well, none of them really change, right? So if we have that kind of stuff in and we get you underwritten, what you're underwritten for today, then you find a property or something like this, we can revalidate your underwriting. So it's like, hey, here's what you can afford today. Things shift. Vince, what about this? So somebody can come back to you, ask a question about a specific property. We can run the numbers all through. We're like, well, based on today's shift, here's where you're sitting. So it gives us a chance to be that heart check for people. Yeah. And then I would say my whole job is about education and knowledge, because really I succeed if I give you the confidence, because you've got the education, you've got the understanding of the products, the understanding of a full budget of what you're looking for, that you can confidently make a decision that's right for you, then I've done my job. Right. So there's no forcing and saying, like, you should go now, you need to do this. It's like, no, we give you all the tools that you can make that decision that's right for you and your family.
How long before someone starts the buying process, the first-time home buyer starts the buying process, should they come and get in touch with you so that it's not a rushed trying to just fit them into whatever they can?
In an ideal world,
yes,
6 months would be great. Because if you need to make some changes, maybe there's a blip on your credit report that you have to dispute or charge, or maybe you haven't started a first-time home savings account, or whatever the things. That gives us the leeway to go through and make some of these changes before you actually go in. Yeah. It's not to say that we can't qualify people earlier, but sometimes you have these little things that come up as blips, and they can delay you. So the more pre-planning you do, the easier and less stressful it is to get through completion.
So for everybody that waits out there until they find that place that they love and then they want to go get qualified, listen to Colin's advice. Start looking early, especially if your plan is the fall, the winter, the spring. If you're looking in the next 6 months, get in touch with Colin early so that you are ready to purchase without, panicking or rushing or thinking you're going to lose this house because
reduce stress levels.
That's right. That's right. Okay. Well, another thing I would love to touch on today is investing. We get questions all the time, especially during that COVID period where money was free. Our clients want to know how to get started in investing in properties. They want to know what the proper plan is, and you and I had a brief little chat after our, in between our previous session and this one, and you had some great advice for people. Now you were in investment properties. What sparked you to get into that?
Actually, I'm going to throw way back to university. I remember, which a lot of people did, university or college, and you rented a house.
Yeah.
4 guys in this house, and the guy who rents this, and I'm looking at it going like, this guy's making a killing. Like he is paying at his house, and I'm paying for it. And that was kind of the initial spark.
Yeah.
And then when my wife and I were buying our first house, it was a very long discussion that happened between us. Sorry, babe. That we went through, and we had the option to do an apartment above our garage, a self-contained apartment above the garage. And I'm like, I really want to do this. She wasn't sure. I don't want to be a landlord. I don't want to deal with tenant issues. I don't want to deal with those problems. And I'm like, I'll deal with that. So we did, and it was one of the best things we ever did. So here's a question I pose to people: how would you like to have a house where someone's paying half your mortgage a month?
For sure. Right?
You can provide a great place to live. It helps you in your equity build, and for some people, I see a lot of first-time home buyers now when they do this is the way to get their foot in the market, because they can afford a bigger house, they can start to build that equity profile. It's not your dream home, the first home that you get, it's a home that gets you the next step to where do you want to go. So when you're looking at an investment property, you really need to look at a longer term. Don't look at it short term, whereas I'm going to get this, I'm going to sell it later on for $50,000 more, and Bob's your uncle, I'm golden. And a lot of people who had condos, that's the problem they're in right now. One of the most savvy things you can do as an investor is look long term. It is an unemotional purchase. So your first home, your dream home, there's a lot of emotions tied up. It's exciting, it's thrilling and stuff like, your dream of how you see yourself living in there, maybe a family coming along and stuff. And an investment purchase is an unemotional, numbers-driven decision. Right. So you're looking at where is the best performance? What can I get for returns on the investment? What are my mortgage costs going to be? You need to analyze the property for all of the other costs, like your interest, your mortgage, your insurance, your maintenance, your property management, your tenant, absency or vacancies. All of those things need to be considered. When you factor all that in and you're analyzing the numbers, you can discount a lot of properties. You're like, these don't work.
Yeah.
Then finally, as you're going through and you're learning how to analyze properties, which is what I do with a lot of my clients, is all of a sudden there's ding, 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 hey, a gem just came up. Yeah. These numbers work. And then it's like, Vince, I want to go see this house. And then you can parachute in, and then you have a lot more confidence. And the nice thing about an investment property is, depending on where you're looking at the numbers, different lenders qualify the income, the rental income, to help you buy the house. So
a lot of people don't know about that too.
It's not have to be exclusively from your own pocket. Some people, will borrow out of their home equity, so they have a HELOC or they have a large amount of equity in their home. They'll take some out, do the down payment with that one. Once they've got the rental income, maybe it's a duplex they're renting or a triplex, or even up to a fourplex. A fourplex still counts as a residential mortgage. Anything going above that into the fives, then you start getting into a commercial property. But it gives you the opportunity to take that rent and qualify of your income. Some lenders will take 50% and count that towards you. Some will go up to 80 or even 100 depending on the situation.
Okay. All right.
Well, it was a long-winded answer.
No, that's great. That's fantastic. I mean, I know a lot of our clients that are looking for investments, they look at the numbers and then we explain to them that they may be able to qualify for a little bit more, like 50% based on what the rental rate is and everything. And then they go and they talk to their financial advisor or yourself, and realize that they can afford it, and it is a little bit easier for them to manage. So,
and I get really excited in regards to the analysis. I love this stuff. I
Yeah.
nerd out on the numbers and the whole investment piece, and provide a lot of advice for people because I find it very exciting.
Yeah, and like I said, when we spoke last time, I know a lot of people will watch HGTV or whatever it is on TV, and they see buying investment properties, and their thought is just, let's just buy an investment property, we'll rent it out, and hope that our rent covers our mortgage, and then a little bit, and then they're making a little extra money each month. But when we were talking, I mean, there are some details that as investors you should know that Colin can definitely help you out with, and we would love to help you find the property that works. But there's some things that you should know as investors that you just don't know right now. And
you don't know what you don't know until it comes up and surprises you.
Exactly. So take it from a very experienced property investor that there are some things that you can learn. So again, reach out to Colin to find out those details and that information, and we'd love to help find you the property. Any other tips or tricks investment-wise that you'd like to leave people off with, or?
Depending on what you're looking for, there's multiple ways to, pardon this question, skin the cat. Like, how do you structure an investment purchase? That can be from, I have high equity and I have a steady income, and I don't have a lot of debt, so maybe doing a cash damming approach, a rental cash damming, which is improving your tax position on your principal home by leveraging a rental property. Maybe that works for you. Maybe you have multiple rental properties and you want to go into a portfolio analysis. So everyone is unique. So my suggestion, never use an online calculator if you're especially going from a rental investment perspective. It'll always tell you, you can get the lowest mortgage rate ever. And then you go into the bank or whatever and they're like, I don't know, we're not touching you because you have multiple properties, or wait a second, you haven't factored that in. It really is important to get into the details. It is document heavy to go through and do this. But if you do that due diligence, you will come out the other end in a better position. There are a lot of people that I'm working with now even that bought condominiums. So condominium is arranged, like buy the condo, rent it out, and you'll be able to sell it a year or two later, get the equity left, and you're going to be golden. And a lot of people are left right now not having considered all these additional factors, and they're hurting because these condos are not selling. They're in a very low ultimate mortgage rate. So if they've got like a 1.25, and we were talking earlier, like, hey, if I could get a mortgage in 4s, that's great.
Yeah.
That's a big difference.
Oh, for sure.
And, doing your analysis to know that you can absorb and plan through financial ups and downs is key to your long-term success. And again, long-term view is really an important thing to take.
Beautiful. That is very helpful to anybody watching. And again, Colin, they can find you on Instagram at the Mortgage Builder.
Yep, you can just Google the Mortgage Builder and I'll come up.
Mortgage Builder.
It's not hard to identify the bald head and when you're going in. So the two shiny guys.
Yeah, the glare. Thank you again for joining us today. I'm sure we're going to get some comments or questions that I'll pass along to you. But Colin's information will be on the bottom of this video as well, so you can get in touch with him directly. Just to finish off, we got a couple of fantastic open houses this weekend. We would love for you to check out 12 Ridgepoint Drive in St. Catharines, and right across the street, 11 Ridgepoint Drive in St. Catharines. Those are both Brian Maddox's listings there. He and myself will be there from 2 to 4 on Saturday and Sunday this weekend. Come and check out the open houses. They will be fantastic. They'll be rocking. We'll have everybody in the neighborhood there. We'll have some treats and some drinks as well. You won't miss it. We also have 340 Plains Road, Unit 512, fantastic, beautiful condo in Burlington that there is no open house, but we would love for you to check out. It is a gem with a beautiful view. And also 125 Shoreview, Unit 226 on the water. It is conditionally sold though, so you may have missed your opportunity. Again, thank you all for joining myself and Colin today. If you have any questions, feel free to reach out, and we'll check you out next time.